Hello and welcome to my channel. This is Sophia Ojukwu, real estate broker, coach, and entrepreneur. Welcome. If you're joining today, you're probably a home buyer looking to avoid these mistakes, or you're thinking about buying a home and you don't want to go down this road of mistakes and you want to learn from other buyers that have made these mistakes. So we're going to talk about the 5 common mistakes that buyers make and how to avoid them. So the first one is pre-qualification. A lot of buyers just want to run out there. They go online and they kind of pre-qualify themselves on some online tool that doesn't really give them a go deep diving into their financial situation. Everybody's financial makeup is different, so you have to get yours. So getting your pre-qualification letter is critical. You've got to know exactly how much you can afford in terms of a mortgage. And also, just because you can afford X in terms of your pre-qualification, you want to really think about it deeper, and we'll talk about that. So the first step is to get your pre-qualification letter from a bank or mortgage broker. So you ask, so where do I start with that? Well, the first thing is you can start with your current bank. Wherever you bank, you might want to talk to them, find out if they have a mortgage broker or lender that you can work with. And then the other avenue is to work with your real estate broker. Now, your real estate agent or broker will have a myriad of mortgage providers. So a bank will probably just be helping you with their products, but a mortgage broker works with several banks. So you want to first look at your lender and see what they've got. Sometimes they have incentives for people that bank with them. And if that doesn't work, you speak with your real estate broker and they will find you the right broker for yourself. So what they'll do is give you about 3 lenders and mortgage brokers that you can talk to. You still have to do your due diligence and talk to them and just make sure they're people you can work with and they have something that will fit you. So the first step again is to get your pre-qualification letters so that you know what you're doing and what type of house you need to buy. So now the second mistake that a lot of home buyers make is that they don't come up with a realistic budget. So you've gone to your lender, they gave you a pre-qualification letter for $500,000, and you're thinking, oh, okay, I can go buy a house for $500,000. And yeah, you could, but again, you have to have a budget that says, not only am I looking at the loan itself, I'm also going to be thinking about the other costs that go with home ownership. With the loan, depending on the down payment that you put, if it's 3.5% or anything less than 20%, you're probably going to have to pay for private mortgage insurance. Okay, so you have to take that into consideration. You have to take into consideration taxes, property taxes, okay? If you're a senior, obviously you get some incentives, exemptions from the government, and also if you're going to be living in the home, you get some incentives. So you get the homestead tax exemption, you get a senior exemption if you're over 65. But if you're under 65, you're going to be paying regular property taxes just like everyone else. So definitely making sure that you have a realistic budget as you go forth. You've got to think about maintenance of the home after you buy it. You're going to have to budget probably around 1% of the total cost of the home. So if it's a $500,000 home, we would suggest maybe making sure that you have $5,000 as a minimum towards maintenance of that home. So you've got to figure out, if you divide that by 12, you figure out that's an additional cost on top of your mortgage every month. So definitely put away some money to take care of those issues that you might come across. And once you buy a house, every year there's going to be maintenance costs. It's not a matter of if you're going to be doing some repairs or maintenance, it's a matter of just when. So it's good to put aside that 1% and also take that into consideration when you're doing your budget for that home. So property taxes, your PMI, maintenance costs, repair costs, and of course home insurance. So that property has to be insured. The bank insists, requires that you have homeowners insurance. So you've got to figure in the cost of your homeowners insurance. So you've got your mortgage, you've got PMI, you've got taxes, and you've got your home insurance. So definitely have a realistic budget, not to talk of your utilities and of course maintenance. So definitely make sure that you have a realistic budget, and you can work this out with working both with your lender and your real estate broker to make sure that you have a realistic budget as you go forward. Now, the third mistake that home buyers make is that they put off dealing with their credit issues. For instance, if you owe the IRS money and you don't have a payment plan in place, that could be a problem, because what the lender is going to require is that you pay off the IRS. Because if for some unforeseen reason you're not able to pay a mortgage or anything, guess what? The IRS comes ahead of the lender, and the lender does not want, they always want to be the first person you pay or gets paid if there's a default on your loan. So what they're probably going to do is make you pay off whatever you owe the IRS. So it behooves you, if let's say you owe $50,000 or you owe $10,000, to call the IRS and make sure that you have a payment plan in place. If you have a payment plan in place, that would be great. The loan officer is not going to, the bank is not going to insist that you pay off your entire amount. They just want to see that you have a payment plan and that you've been paying on that payment plan for at least 3 months. So if you don't have a payment plan in place, make sure that you call the IRS and set up a payment plan and start paying even before you start looking for a home. So that way you won't have to pay off the entire amount, which will come from the lender, but it cuts into the amount of money you're going to get from them to buy the house. So it's a good idea to have that put in place. And also the other thing that might from a credit perspective is the fact that maybe you bought a car before you're looking at embarking on buying a house. So if you bought a car before you're embarking on buying a house, you're going to have that payment on your credit report, and that payment typically $300, $400, $500, $700. I've seen $750 per month. That's going to cut into how much house you can buy, because what the bank does is not only look at your credit score, they look at your debt to income ratio. So because you have this car that's $750 a month, it's going to reduce the amount of money the bank is going to be able to loan you. So it's usually a good idea to first buy the house before buying a new car. So you buy the house, I would say buy the house, be in there for a couple of months just so that you understand all your expenses before embarking on buying a car. And that will really help you in terms of the kind of car that you're going to want to buy. Okay, so that's one of the mistakes. A lot of first-time home buyers make this mistake. They just run out, buy a car. Once they buy the car, then they think about buying a house. You don't want to do that. You do the reverse. It'll be better for you, and you'll have less issues by doing that. So now the other reason, another common mistake that buyers make is that they don't bother trying to research and hire a good real estate agent. They go online, they see a house, and they ask the listing agent to come show me the house, et cetera, but they don't understand that the way realtors work. Okay, whoever shows you that house is the person representing you on that house, unless you have signed something that says they're not. So basically, you want to have your own real estate broker that's representing you and you alone, that's representing your interests, that's negotiating on your behalf. If you, for instance, contact the listing agent, they're not going to be able to represent you like they should, because all of a sudden they've been turned into a transactional agent. By law in Illinois, there's certain things they can and cannot do because they're representing both sides. So it's like operating with your hands tied behind your back. So it makes more sense. It's a big mistake to just use the listing agent, the seller's agent. They might say, oh yeah, if you come with me, I might drop 1%. That would be helpful to you. But guess what? If that house is overpriced by, I don't know, 6%, you're not really saving any money. And they priced the home. And so you're buying the house overpriced. You think you're getting a deal because they gave you a break that's going towards your mortgage, but really you didn't get a break. So it's always better to use your own real estate broker. They will do their due diligence to make sure that you're getting a fair price for the house, and they're going to negotiate on your behalf. And they have the fiduciary responsibility to you and no one else. So that's another mistake that home buyers make. So first one, the prequalification letter, get one. Having a realistic budget, make one. Putting off your credit issues, make sure you don't do that. Not hiring a good real estate agent to represent you and you alone. Then the final mistake that we're going to talk about, there are plenty of them, but we're just going to focus on the 5 common mistakes, is the down payment. I find especially a lot of buyers that are new in the market, and those that have had property in the past but haven't bought a house anytime soon, is that they pre-qualify themselves out of the house, meaning that they determine, oh, I have to have 20% down payment in order to buy this house. Well, no, you don't. There are like 3 different packages that are out there now. One is, ideally, 20% is great. You get the best rates. You don't have to pay PMI. There's a lot of benefits to putting down as much as you can, right? But you can buy a house today with 3.5% down. Now, 3.5% down would be for like an FHA loan. FHA loan just only requires 3.5% down, and also the credit score is not as stringent as if you're doing a conventional loan. Conventional loan you can do as little as 5%, but you would have to pay PMI. Okay, that's private mortgage insurance. So now, if you're a veteran, USDA and the VA will give you a 0% down payment. Yeah, 0% down payment. They're the only ones that get that these days. And that's just to honor our veterans for all the sacrifice that they have made for them and their family. So make sure that you understand and do your research in terms of the down payment that's going to be required for purchasing that home. So the down payment, the upfront cost, and the maintenance cost, those 3 elements have to be thought about as you're going forward in purchasing a house. So if you have not subscribed, or this is your first time here, go ahead and hit the subscribe button. If you like this video, give me a thumbs up. Okay? Share, like, share, share, share. Okay? I'm just getting started. I'm trying to build up my channel. The inspiration came from all my clients that keep asking me questions. I thought, well, why don't I jump on here and record the answers? Because if they have questions, I'm sure other buyers and sellers have questions. So I hope the content is useful to you. If you have any questions, Please leave your questions and comments below. I will be responding to each and every comment. So, and if there's any other information that you would like me to cover, put it down below. Okay, so that's all for today. 5 common mistakes most buyers make. Have a great day. Bye.